Okay, hello and welcome for those of you who've just joined us. Great to have you here with us in the session. So I know we have lots registered today and the attendee numbers are slowly creeping up, but I think as we've got lots to cover in the interest of time, we'll get started with the workshop. So firstly, a big welcome on behalf of myself, Fiona Quinlan-Wells from the UN SSE team. Great to be here with you all today. So we're here today for the first in our two parts of our training program on gender equality and global markets. So as I mentioned at the start, feel free to introduce yourselves in the chat as we're getting started. Maybe let us know what organization you're joining us from today. Yeah, and great to have you all here with us. So as we're getting started, I'd just like to say a big thank you firstly to the Johannesburg Stock Exchange team for hosting us in today's session, and particular to Vuyo Gabrielle and to Loshni for joining us and for supporting us in coordinating today's session. I'd also like to say a big thank you to our partners on this training program, the IFC, UN Women, the Columbia University, and with the support of the Luxembourg government as well. So a big thank you to all of our partners. And so to kick us off, I'm very pleased to introduce our opening speaker today, Vuyo Lee, who is the Director of Marketing and Corporate Affairs at JSE. So big thanks, Vuyo, for joining us, and I'll hand the floor over to you.
Thank you very much, Fiona, and good morning and good afternoon, wherever you are in the world. My name is Vuyo Lee. I'm the Director of Marketing and Corporate Affairs here at the Johannesburg Stock Exchange. And it really is my privilege to welcome you all to the JSE workshop on gender equality in global markets. We're really proud to be associated with the Sustainable Stock Exchange Initiative, UN Women, the IFC, the government of the Grand Duchy of Luxembourg. I see it's sunny in Luxembourg. Welcome, everybody. Columbia University School of International and Public Affairs. I think for us, what makes this significant is that we are convening this conversation right in the middle of Women's Month. And it really is a moment to remind us of, the importance of sustainable development and how it will be difficult to achieve it without gender equality. And that principle is affirmed in the UN 2030 agenda and also the SDG number 5. It is at the JSE one of our priority SDGs when we look at some of our strategies related to sustainability as well as our CSI initiative. So why it is important, I guess, as a starting frame is to say that capital markets are very important in terms of shaping the world we live in. And capital markets are critical when it comes to directing capital towards ideas and businesses that deliver economic and social progress. And yet, in driving these capital market decisions, women are excluded, and gender equality remains one of the under-leveraged drivers of economic growth and long-term value creation. And we know the case studies. I mean, the research has been done to show that it is a missed opportunity to not include gender equality because when women are included as investors or entrepreneurs and leaders, the potential of the capital markets is fully unlocked. You see markets that are more efficient. You see markets that are more innovative and more resilient. And from a governance perspective, it is seen that when women are involved, decisions are much more robust, and risk management is a key focus. But what you see is in this current world is that capital is still shaped by legacy networks. There are still unconscious biases that exist, which excludes half the population. And we can talk about how unfair it is, but if we're talking about the economic case for gender equality, that exclusion actually is an efficient use of resources. And at the JSE, we understand this, and we see how gender equality is fundamental in terms of our role as an exchange. We realize that we are operating in an emerging market context, and we also believe that sustainable value creation depends on closing gender gaps in finance. And our strategy is actually anchored in this. We believe in showing great shared prosperity. This is why we promote improved ESG practices together with Loshni, and while we continue to build an enabling environment for women. I joined the JSE 5 years ago, and one of the things we did, we started developing a gender equality strategy at the JSE. And what was amazing was that we could lean on the Sustainable Stock Exchange, their gender equality framework to inform our approach to promoting gender equality and also supporting the participation of women in the economy. And we believe that in order for us to advocate for this, it's important. And when I say advocate, is if we want other listed companies and also allocators of capital to follow in promoting gender equality, we needed to lead by example. We needed to showcase what a best practice looks like. We needed to showcase what being a good corporate citizen looks like. So some of the things that I'd like to share what the JSE has done in you know addressing gender equality as a strategy. As a starting point, our listing requirements mandate that companies need to report on gender diversity at board level. So first they need to set targets, and then they also need to report on how they're progressing on those targets. And this is really about reinforcing the accountability where it matters most. At the JSE, 75% of our executive committee, so there's 8 of us in EXCO. I'm one of the EXCO members. 75% of our EXCO is women. So there are only two men in our EXCO. They are the minority, ironically. And 60% of our board members are women. And that really talks about, not only inviting women to the table, but putting women at the head of the table, making the highest levels of decisions. We continuously coach and develop the women in our company. Women make up 54% of our workforce. And we believe in development to grow our own timber and also help them realize their full potential. And in our enterprise development and accelerator programs, we prioritize women-owned businesses because we want to make sure that the businesses are sustainable. Most women are in the entrepreneurial space or the informal market. They are creators of employment, and if 90% of employment is to come from small businesses, that's one of the targets of government. We need to make sure that women-owned businesses survive, and we need to also make sure that they have access to the same funding opportunities as their male counterparts. What we've also done in our organization is some of these women-owned businesses we support. They've been integrated in our value chain, and we also take this integration as far as our philanthropy and CSI. 70% of the beneficiaries of our corporate social investment are women and girls as well. Having said that, there's so much more that needs to be done internally and externally, and this really brings us to today and why this workshop is an important step forward. I think that by choosing to be here, we all signal a willingness to understand the structural barriers that impact gender equality. But I'm hoping that out of this session, we can actually explore innovative and practical solutions for addressing this and shaping the markets that we serve. So I really do look forward to the discussions ahead and really thinking about how we can make a collective impact as far as driving gender equality and progressing on SDG 5. So I'll leave it there. Thank you very much, and I look forward to seeing how the discussions unfold.
Thank you so much for setting things out so well for us there. And fantastic to hear about all the work you're doing at the JSE and with your issuers on this topic. And great to hear about the value of the SSE resources to support that as well. And yeah, we really commend your progress and commitment on this topic. So many thanks for setting the scene so well for us there. Okay, fantastic. So that now brings us over to a little bit of an overview of the training program today, which I'll just walk us through. So today's training is all around that interface between gender equality and global markets. So as we've already touched on, as I'm sure many of you feel, gender equality can be a sensitive as well as a complex topic. And so, of course, rather than pretending that that complexity doesn't exist, what we're really aiming to do today is to better understand it and identify ways to move forward. So, and today we're going to be particularly focusing on looking at that complexity, understanding kind of some of the key concepts around gender, And then in our second session next week, we're going to get into a more action-oriented focus, looking at some of those mechanisms that we have available for advancing gender equality and addressing these complexities. So just on a housekeeping level, you've probably noticed that as participants, you're muted in the training session, but we do really encourage you to make use of the tools in Zoom to interact with us. So it's great to see so many of you already sharing your comments in the chat box. So feel free to continue to share any general introductions or comments in the chat. However, if you've got particular questions as we're moving through the content, we'd encourage you to post your questions in the Q&A box because that will enable us to track and respond directly to your questions. So our format today is a live 2 hours exactly session together. And we'll, as we say, having live opportunities for Q&A throughout the session. So do make the most use of that opportunity to ask your questions. We really do encourage your participation in the session as well. We're going to be doing a number of interactive exercises as we move through, so make sure to take part in those as well. And then finally, if you complete the 2 parts of our training program, so that's part 1 today and part 2 next week, you'll be able to receive a completion certificate for the training course. So make sure to stick with us to the second part of the training next week, and then we'll share information about the survey you need to fill out to get your certificate. So just to mention as well, all of the content that we're going to be talking about today is available on the SSE website. So you can follow the link that Landon has shared in the chat already, I believe, which will take you to the web page for today's session. At the bottom of that page, you'll find the resources section where you can find the slide handout from today's presentation, as well as those of all of our guest speakers as well. So if you look there, you'll be able to find links to all of the different resources that we're going to mention in the training today. We'll also add the recording of today and next week's training sessions to that page following the sessions as well. So just to introduce who's going to be delivering the training for you today. So as I've mentioned, I'm Fiona and I'm very pleased to be joined by my colleague Landon Wilcock from the SSE Academy team as well. And alongside us today, we're very pleased to be joined by Alexandra Carter, who is the coordinator for the Women's Empowerment Principles at the Global Secretariat for UN Women. And so it's great to have Alex with us as well today. She'll be talking to us a little bit later in the session about the work of the UN Women team on the WEPs. And towards the end of the session as well, we'll be joined by a guest speaker from Bloomberg. So Eureka will be talking to us a little bit about how at Bloomberg, they're working to incorporate gender equality into the approach they take to assessing and scoring companies on their sustainability performance as well. So, as I've already said, we know that gender equality can be complex, but to help guide us through that complexity, we've broken today's training program down into a 4-module structure, which is really designed to support organizations in taking steps and acting on this topic. And now, of course, we know in the training session, we're going to be presenting this as 4 nice sequential aspects. But of course, in reality, within your organization, you may find that you're working across various aspects of these areas at the same time, or you're revisiting earlier steps as well. So in our first part of the training today, we're going to look at those first 2 steps on the top half of the screen, preparation and alignment. So this is all around understanding what gender equality is, why it's important, and then providing an overview of the main standards and guidelines that you have that can help to guide your performance on this topic. Then the second part of our training next week will dig into the action side. So that's where we'll go through the second 2 steps, which are around implementation and communication. And so for today's session in particular, we've got 2 key learning objectives for you. So firstly, we'd like to help you to understand why action is needed for enhanced gender equality. So what's the real case for action here, and what are the benefits for businesses particularly? And then secondly, we'd like to look at identifying the tools that can be used to enhance gender equality as well. Okay, and that just shows you our agenda for today, broken down in our time. So we'll spend an even amount of time across our two modules there. We'll take a short break in the middle of the session, and then we'll wrap up at the end with some resources and finish off with any open questions we might have still to answer. But to get us started, it would be great to do our first Menti exercise together. So we're going to use Menti a number of times throughout our training session today. So I would encourage you to find your way to access Menti now as we'll come back to it throughout the session. So Landon's just shared the link with you in the chat to enable you to access Menti, and I'll just share my screen as well, which will give you a number of other ways that you can join us. Okay, there we go. So on the right-hand side of the screen that you're seeing now, you've got a QR code you can also use there to access Menti. And then on the top of the screen, there's also the option of going to menti.com and entering that 8-digit code you see there. And then finally, of course, clicking that link that Landon has shared in the chat with you. But encourage you to use Menti now because, as I said, we'll use it a number of times. But our first question for you is just to get a level of understanding of what your current comfort is on these different topics that we're going to be talking about today. So, how confident you would be currently in your knowledge of gender equality and global markets, in discussing these topics with others, and how likely you feel you would be to take action to improve gender equality in your organizations. So it looks like certainly we're feeling very inclined and motivated to take action. So that's fantastic to see. Thanks everyone for letting us know. And maybe a little bit less confident on the other two, but overall, maybe not a bad starting point. So do feel free to share with us in the chat throughout the session as well, any perspectives that you might have on what we're talking about, any experiences that you might have from your own organizations or lives indeed as well about these issues. So great to understand where you're currently at on this topic. Okay, so I got another question for you in Menti that will kick us off. But before I do, we'll just kind of introduce now that we're going to be moving into our first module, Prepare. So Prepare is really all about starting to understand how gender connects to finance. So within Prepare, we're going to be covering three main sections. So narrowing to the topic a little bit more each time. So we'll start first by looking at some of the key terminology that will help us to communicate gender equality. Then we'll narrow in a little bit more on the case for action. And then we'll finally finish off by looking at some of the market trends around how we're performing globally on gender equality. But to kick things off, we know that the kind of terminology and wording can be an important thing to get clear on to get started here. So our next question in Menti for you is to think about what you think of when you hear gender equality currently, and what does the term gender mean for you? So it's great just to have a go and share with us what you think. This is not a right or wrong answer as such. But great to get your perspective here. And then what we'll do is we'll go back to our slides and have a look at an official definition from UN Women that we'll use in today's training, just to make sure we're clear and sort of consistent in what we mean here. But I'll give you a second just to have a little think about what comes to mind for you. Feel free to just share one or two words, maybe have a go at a definition if you think you might have one. But let's see what you think firstly. Okay, so I see a couple of responses coming in so far. Give everyone else a few more moments to have a think. But from those we see already, so I see a few people mentioning male and female a few times. I see sexuality and sex at birth has come up a little bit. Biological identity. Okay, so those are interesting, but I think some of the words that I'd also draw out that we're seeing here would be around identity. I see that there. Social construction, um, access, a social role, maybe differences. So quotas is coming up as well. So lots of already shows the complexity here, doesn't it? Lots of different conceptions already of what we're talking about. Um, But indeed, I think often when we think of this, we might think about male and female, but that's kind of the biological sex. But actually, gender, as we see, has a lot more nuances to it around your identity, about the social constructions, etc., as well. So I see kind of a little bit of a mixed picture, perhaps, at the moment about what we think on this topic. So that's interesting. Okay, so that's great. Thanks everyone for sharing those ideas. So I'll take us back to the slides now, and Landon's going to kick us off in the next section and talk us through the definition we'll be using in today's session for this term.
Great. Thank you so much, Fiona, and great to be with everyone and everyone joining today. Yeah, there's a lot of really good answers coming through, but I do want to make sure that we're all on the same page as we continue through today's session and the next session as well, so that we all understand the depth of gender, which is not simply sex, so being male or female. And the purpose of that initial exercise is to make sure that everyone understands that gender is not the same as sex, and that gender can differ in a different context or across different societies. This is important because it's not really different sexes we always need when we speak about the value of diversity and gender diversity. It's actually different ways of thinking, different life experiences or lived experiences, and different institutional restrictions or freedoms. So while the term gender is actually quite difficult to define because it means something different to all different people, as said, in different contexts and societies, let's briefly get a better idea of what is included in this complex term. So UN Women defines gender as the social attributes and opportunities associated with being male and female and the relationships between women and men and girls and boys, as well as the relations between women and those between men. These attributes, opportunities, and relationships are socially constructed and are learned through socialization processes. They are context and time specific and changeable. Gender determines what is expected, allowed, and valued in a woman or a man in a given context. In most societies, there are differences and inequalities between women and men, with the responsibilities assigned, activities undertaken, access to and control over resources, as well as decision-making opportunities. Gender is part of the broader socio-cultural context, and other important criteria for socio-cultural analysis can include class, race, poverty level, ethnic group, and age, amongst other factors. As such, gender is not quite as simple as just male or female. Gender can be influenced and defined based on the nature of certain relationships, based on hierarchies, histories, contexts, and institutions or norms. And most importantly, when we're discussing gender equality today, please remember that we're referring to equality of the genders, not simply just increasing women on boards. You can feel free to explore this and some other gender equality related terms on the gender equality glossary developed by UN Women that we link to here in the slides. And again, just a reminder that all the slides are available on the event page. With that, we'll dive a bit deeper now. I'm sure most of you have heard of the acronym DEI, which stands for Diversity, Equity, and Inclusion. And we're increasingly seeing DEI managers or even teams in organizations that focus on ensuring an organization's DE&I performance. So why not just diversity teams or just equity teams? Well, let's unpack that a bit more and see how these concepts connect and interact, and the importance of having not just one or two, but having all three as the full equation. Let's start here with equity, which is ensuring that there's equitable power distribution amongst people. You can think of equity as providing women and men with the same microphone that amplifies their voices to the same extent so that everyone could hear them equally, which many of you might be thinking, well, isn't this the entire objective? Well, not quite. It's a part of the picture. Let's say, for example, that our objective is equity, equal power distribution, but there's no woman in the organization to fairly distribute power to, and there's no one to actually pick up or use that microphone. With that, that means we need to also focus on diversity. So diversity is ensuring representation. So the act of inviting the underrepresented gender to join the board, enhancing the diversity of a board. Think of diversity as having enough seats at the table for diversity to be represented at that table. Again, differences and different lived experiences are important to organizations. So it's not enough to have microphones at the table to make sure everyone can speak at that same volume, but also enough chairs so that a diverse group of participants are at the table and willing to speak. So if we just have those two, however, you can have cultural assimilation take place, where we expect, for example, women to act just like the men, and then we'll struggle to keep them on the board, and we won't be benefiting from the diversity that we aimed to achieve in the first place. So it's no good to give someone a microphone if they're not able or willing to speak, or alternatively, to claim by giving someone the power to speak based on their appearances alone is achieving diversity. When the objective of diversity is to include diverse ways of thinking and diverse lived experiences that all genders can bring to the table. With that, this is why we also have inclusion. Inclusion refers to behaviors and the practice of making all members of an organization feel welcomed, giving them equal opportunity to connect, belong, and grow, to contribute to the organization, advance their careers, and feel comfortable and confident being their authentic selves. So to bring this all together, we can say that diversity is being invited to the boardroom. Equity is then having the empowerment to speak at the boardroom, and inclusion is being listened to within that boardroom and board meeting. But of course, this goes much further than the boardroom and should be considered organization-wide and at all levels. I think we often can focus on just the leadership or just the boardroom, but you do need gender equality and DEI throughout all levels and elements of an organization. With that, then goal is then equality. So you see that in the middle of the Venn diagram, and that depends on all three circles: diversity, equity, and inclusion. We can have diversity without equity or inclusion, and it won't be sustained. Equally, we can have equity without diversity, but we won't make any real progress. So when we talk about equality today and in the next session together, especially when we talk about the benefits it brings, remember that we're not simply looking for an equal number of men and women on boards or managers, or in organizations. What we really want is these three things together: diversity, equity, and inclusion. So hopefully we're a bit more clear and a bit more on the same page for some of these key definitions. But if you need a bit more of a refresher, again, you can find more information in the packet downloadable on our website. So we'll move along into our next module. This is the case for gender and why does gender matter? Now, I'm sure many of you already have kind of your own answers to that question, and I'm sure they're all very valid and good ones. But we want to start by noting that equality between genders is indeed a human right. So it's widely documented that women and girls experience adverse impacts of business activities differently and often disproportionately. They can also face additional barriers in seeking access to effective remedies. Moreover, because of multiple forms of discrimination, different women and girls may be affected differently by business activities depending on their age, color, caste, class, ethnicity, religion, language, status in a rural or living in a rural location, marital status, sexual orientation, gender identity, disability, and also their migration, indigenous or minority status. So there's many different aspects that can all influence and interact on how someone is treated. But what that is all to say is humans are complex beings with many different elements that make up their unique identities. And as such, this is also a complex and interconnected topic. The document you see here is the UN Guiding Principles on Business and Human Rights, or the UNGP, UNGPs, which are the global authoritative standards to prevent, mitigate, and remediate business-related adverse human rights impacts. So on the slide, we've flagged for you 4 different principles to help us understand the obligations that businesses have regarding human rights and gender equality. The first principle we were highlighting is Principle 14, which indicates that the responsibility of business enterprises to respect human rights applies to all enterprises, regardless of their size. So that includes SMEs or small and medium enterprises, not just major multinationals. And it also applies regardless of their size, sector, operational context, ownership, and structure. The second principle we highlight here is number 16, which encourages businesses to express their commitment to meet their human rights responsibility through a statement of policy. Another principle I want to highlight is number 20, which highlights that to verify whether adverse human rights impacts are being addressed, businesses should track the effectiveness of their response by using by using sex disaggregated data. We'll talk more in today's session and the next session about this term, about sex disaggregated data and the importance of it. Because really, the sex disaggregated data, you'll hear this a number of times in these sessions, is really key to enable you to make better decisions internally and identify any issues related to gender equality as they arise. Lastly, Principle 21, this particularly highlights the important role of communication. Both the information and the means of communication should be responsive to gender discrimination and the differentiated impacts experienced by women. What's important to consider from a financial perspective is that in addition to being the right thing and the moral thing to do and having a positive impact on society, organizations should also be considering the repercussions associated with violating the human rights of employees, partners, and stakeholders. Policy or legal risk and reputational risks are important risks to be considered for gender equality and social related disclosures as well. We'll share the link in the chat if you want to take a look at any more of the detail around the UNGPs. So with that, many of you might recognize these graphics quite quickly and already, and it's important to note that sustainable development depends on equality of genders. So as I said, you probably recognize the image here as the UN Sustainable Development Goals or the United Nations SDGs. Gender equality is on its own. It's one of the 17 SDGs agreed to by UN member states, but it also contributes to all other SDGs as well. So it's cross-cutting. For those who are less aware of the SDGs represent an ambitious attempt to end poverty, protect the planet, and improve the lives and well-being of all of humanity. So with that, SDG 5 focuses specifically on gender equality and the empowerment of women and girls. But as mentioned, aspects of gender equality appear in the targets and associated indicators of most of these SDGs and is reflected and integrated into all of the SDGs. So if you'd like to see how gender equality links to the different SDGs, you can have a look at Annex 3 of the SSE guidance on gender equality for exchanges. So you may ask, what exactly does improving gender equality do for society? Well, a lot. So studies have shown that when we have more equality of genders in society, we also see lower levels of violence, greater economic productivity, and increased resilience against financial and environmental crises. I want to take a moment to remind you that by gender equality, we don't want to imply more women than men. But equality means that both women and men are represented, have the same level of power, and are both heard and understood equally. However, to achieve equality, in many cases, we do need to provide extra support to the less represented gender, which in many cases today is women. To give you an example of the extent of impact that gender equality currently has on society, a study by the World Bank Group estimated the loss of human capital wealth due to gender inequality at over a staggering $160 trillion. Another study concluded that the equal participation of men and women entrepreneurs could boost global GDP by approximately 3 to 6%, which is another quite staggering figure when you consider the impact that would have on global GDP. And you can read more about this by clicking on the links in the slide in the handout. I want to take a moment to discuss a few other benefits. So we've seen that promoting gender equality of genders has been found to have positive social, environmental, economic, and business benefits. And we can narrow a bit deeper into the benefits that companies can find from enhancing equality in their organizations. And we find evidence and see many examples that companies with higher levels of diversity, both gender and ethnic, at the executive level, are found to show higher performance than their less diverse counterparts on both profitability and long-term value creation measures. We also see that different genders have different attitudes towards risk. So if our decision makers, like the board and leadership team, are gender diverse across the organization and programs, that can lead to a more balanced decision-making process. We also see different genders experiencing the world different, and that's the lived experience element that we've brought up a couple times. And therefore, they, of course, have different views and ideas they can bring to an organization and a table. Companies with workplace policies that support and promote gender equality are also better able to attract and retain talent, which is critical in an increasingly competitive marketplace for the workforce. And according to data from Parallel Finance, investor demand for gender lens investing has continued to grow in recent years, with assets under management but for gender lens equity funds reaching 4.5 billion by the end of 2024. Therefore, increasingly, companies with strong approaches to gender equality have access to dedicated funding, which can recognize their progress. Finally, companies with more diverse boards and senior management teams demonstrate better environmental, social, and ESG performance, including having more ethical business practices, enhanced workplace and workforce policies, and stronger community relations. We'll take a moment now to look at some of the internal impacts of diverse leadership. So this is just one of the many studies on this topic, and we'll see a bit more detail about the benefits that diverse companies are seeing. And apologies, I'm getting over a cold here myself, so if I'm a little nasally or need to take some pauses, my apologies. So this data comes from a study by FP Analytics, the Independent Research and Advisory Division of Foreign Policy. So the study looked particularly at industries that are traditionally male-dominated, analyzing over 2,300 publicly listed companies around the world and more than 160 in-depth one-on-one interviews and follow-up surveys. The study finds that companies with more women on their board have on average a higher profit, greater transparency, and higher social ratings. So we'll look at those three statistics. First, on profitability. The study found that the companies with the highest percentage of women in management were on average 47% more profitable than those with the lowest. These findings are consistent with other evidence that promoting gender diversity can benefit a business's bottom line. In a study by the International Labour Organization, or ILO, women interviewed for the study detailed how they were leading their organizations on new revenue-generating paths, advancing innovation, and advocating for harm-reducing practices, and increasing transparency to build stakeholder trust. Second, on transparency. So building trust across stakeholder groups, including employees, consumers, regulators, and investors, we know is vital for legacy industries that are working to evolve their business models improve regulatory compliance and performance, and respond to consumers' ever-changing needs. The study found that the companies with the highest percentage of women on boards are more transparent in terms of ESG information disclosure. In particular, companies with at least one woman on the board are 17% more transparent than those with no women board members. Finally, on CSR or corporate social responsibility, the analysis found a positive correlation between gender diversity on corporate boards and companies' social responsibility performance. Women interviewed for the study provided numerous firsthand accounts of their efforts to protect safety and labor rights, integrate community development into business strategy, build local capacity, and empower women. We discussed a few slides ago that diversity and equality can have important societal and environmental impacts. So another interesting aspect of the same study was that equality not only had an impact within the company, but also for the environment where that company operates. For example, more diverse boards were 39% more likely to reduce emissions. They were 46% more water efficient, and they were 60% more energy efficient than their peers with less diverse boards. In your handout, you can find a couple more studies if you want to dive a bit deeper into this. We'll also share in the chat a publication from IFC on gender responsive climate governance and the role of women leaders. But I'll turn it back over to Fiona for the next section.
Brilliant. Thank you so much for that, Landon. So hopefully that gives us a little bit of an overview there of some of the drivers for taking action here and, some of the real benefits that organizations can see from acting on this topic. So now that we've had a little bit of a look at that, we're going to round off this first module by having a look at the state of the market and getting a better understanding of where we are now in terms of progress on gender equality. So to help us kind of get started in thinking about that, we're going to go back into Menti now and get you to guess really where we're at currently before we look at some of the statistics together. So Landon's reshared the Menti link. Thanks for that, Landon. And I'll just reshare the screen again now so that you can see the other options. I'll just add the details to the side of the screen again so you have that option. But the question we have is that we'd like to get you to guess on our current trajectory or current rate of progress, in how many years do we think it is going to take for the world to achieve gender equality? So you can move that slider that you see on the screen to take a guess as to where you think this could be, anywhere between 10 years and 500 years, but only in increments of 10. Probably the size of the scale here might give you a little bit of a clue as to the fact that it's going to be a somewhat large number if I'm not giving you too much of a hint there. But I'll give you a moment to have a think before we look at this together. So I see about 30 of you have voted so far. Let's see, we have how many of us together in this session? 100. So it would be great to have a few more of you taking part in the Menti. It's an important part of the training to take part and interact with the exercises. So please do so. So I can see we've got about 60 of you in Menti. So there's another third of the group who've yet to open Menti. So please do that. It would be great to get your input. But from those who voted so far, I can see it looks like 100 years or 500 years are perhaps the two most popular options at the moment. Not many of you going for options under 100 years. Let's try and get to 50 people taking part. That would be half of our participants. So there we go. And let's have a look at the right answer then. So indeed, the correct option is 285 years. So this is according to a report by UN Women, which is available in our materials, which shows that, yeah, it's going to be almost 300 years on the current rate of progress before we achieve gender equality. So yeah, quite a long time. I will note that this measurement could differ depending on exactly how we measure gender equality. So For example, the World Economic Forum also conducts something called the Global Gender Gap Report, and they suggested a figure of more like 130 years. So, it can depend a little bit, but of course, overall, what we're seeing is that it's going to take a long time for us to reach gender equality based on the current rate of progress. So, a long way to go, I think we could all agree. So now let's zone in a little bit more at the company level and see how we think this looks. So we're going to take a guess about within your region. So we're talking about Africa as a continent here, and we'll go through the different data points on this. Across Africa, so what percentage of CEOs of listed companies do you think would be are women? This comes from some research conducted by our team, which we'll share with you in a moment so we can look at the results together. And we'll also look at the particular picture for South Africa, but across the region as a whole, take a guess as to how well do you think you're doing in terms of the percentage of CEOs from listed companies that would be women. So again, you could take a guess here, anywhere from 0 to 100% on that sliding scale. You might be familiar with an American study that went viral a few years back that indicated that there were fewer large companies in America that were run by women than by men specifically named John. So a sure indicator that the glass ceiling does remain firmly in place in corporate America. But yeah, how do we think that that compares globally? Let's have a think about that. So it looks like from those who voted, certainly we're all thinking probably majority under 20%. 20 is quite a popular option, but also quite a lot of people going somewhere between 0 and 10% perhaps. I like the optimistic person who said maybe 75%. But yeah, let's take a look at the right answer now. So it's just 8% currently. So unfortunately, those of you who went on the lower end were indeed correct. 8% of women CEOs currently in Africa. And we'll look at how that compares shortly to other regions as well. And then the second question on a related topic is just to get a sense of how many board seats on corporate boards do you think would be held by women? So maybe just interesting to think about whether you think this would be higher or lower than the number of CEOs that are women. And then we'll have a look at that picture. Okay, so you probably might have been informed slightly by knowing that 8% of CEOs are women. Maybe that might temper your guess on this question, but let's see what you think. So, again, it looks like most of us are going somewhere between 0 and 20%. Some people going a little bit higher. Perhaps some people thinking it could be a bit higher than the number of CEOs, perhaps. So, we'll give you a couple more seconds to have a think, and then we'll have a look at that right answer. Okay, let's show the correct answer. So 25%. So indeed, it was a bit higher. So actually more optimistic than I think most of the votes this time. But yeah, obviously still a long way off gender equality, but perhaps we're seeing a little bit more progress in terms of board seats held by women. So that's an interesting part. But yeah, we've got a lot more data on this that we can share with you, indeed zoning in particularly on South Africa as well. So I'll reshare the slides now and Landon will talk us through that picture.
Great. Thanks so much, Fiona. And yeah, exactly. As you can see, we do have a lot of great data on this topic. We've at the SSE have been doing a report for going over 5 years. This is the sixth year now. So I shared one of the many reports that we put out this year on gender equality in corporate leadership. Specifically, I shared a report on Africa. And again, for those who haven't seen the publications before, we do these in collaboration with IFC, UN Women, and other partners, and we provide markets with an overview or benchmark of current progress on gender in leadership of listed companies. So let's dive into one of those reports now. So here we have the 2025 report covering the G20 and regional groupings. And with the next slide, okay, great. You can see the first section, which covers the G20. We'll also link this publication in the chat so you can read it in your own time too. And again, all these publications can be found on our publications page. So our aim for this is that the data can and will serve as a benchmark for exchanges and other relevant institutions in their efforts to promote women's full and effective participation in and equal opportunities for corporate leadership. So the first table that we see on the screen shows that the average percent of board seats held by women in the G20 for 2025 is about 25%. We see a positive trend line. You can only see, I think, two markets there where we saw a decrease year over year, and the rest either flat or actually up by a decent margin considering it's annual. In any case, you can't quite see it. I know it might be a bit small on your screen. The top five exchanges in the G20 are located in France, the UK, Italy, Australia, and the USA. It's also worth noting, given that France leads the leaderboard for the G20, that France has a regulatory requirement for women on boards. So they require at least 40% of the less represented gender of board seats to be women or the less represented gender. However, even though the percent of women on boards is among the highest in the world, France's women's executive leadership pipeline is and was not quite as strong. So, for that reason, in May 2021, the French Parliament voted to introduce what we call a gender quota for executive leadership. So they set 30% minimum for either gender, meaning the less represented gender has to be at least 30%, and 40% by 2030. So obviously you can see here they've already surpassed the 40% target for 2030, as last year we found the data to be 45%. As noted, we can see many countries improving slightly year over year. We also see a couple sliding backwards year over year. And then we see there's still overall, for most markets, a very long distance to travel to, say, reach the 30% threshold, which we'll talk about a bit throughout the sessions as why that 30% threshold matters. We also see, for example, that there's not many markets with a 0% firms without all male boards. So obviously there we mean boards that are just men. So most markets here you can see anywhere from, some only have 2% men only on the board. But then some you see as high as, let's see, 49% in Indonesia. So we'll look beyond the G20 as well now because we have some good data regionally. So here we see that Europe is the regional leader with those five markets selected, with 38% board seats held by women. Even then, we see as the leader, there's still 2% all male boards persisting, and we still only see 7% female CEOs. The next was US CanZ, a grouping of Australia, USA, with two exchanges, NYSE and NASDAQ there, Canada and New Zealand at 34%. We then had Africa with South Africa, Kenya, Nigeria, Morocco, and Egypt at 25%. The spoiler there is that South Africa, if you don't know yet, is the leader for Africa. And we also saw this grouping increasing year over year by 1%. And we saw 6% of firms with all male boards. And we actually saw a higher than average compared to the other groupings with 12% female board chairs, which is still, of course, far too low, but positive to see this grouping leading the way there. Then we had Southeastern Asia at 22%, Eastern Asia at 17%, Latin America at 16%, and then by far the lowest to Western Asia at just 9%, and of course the highest all male boards. Great. So we do have more data on Africa. So here we see the regional grouping. We also released a deep dive for Africa that was the report or the publication I shared in the chat as well. So again, you can see that Johannesburg Stock Exchange is at 33% board seats held by women. So given the average is 25%, we can see that JSE is really, really bolstering that grouping with their 33%. And then we see here as well that there's 59% firms with at least 30% women on boards, which is quite actually a healthy number comparatively to other regions. And then also bolstering the region's average of 12% chair position held by women, JSE also has 19% chair positions held by women, which is great to see that leadership from this grouping there. Positively, we also see that increasing year over year. And then we see 9% CEO positions held by women across the firms we researched. I will note then there's Kenya in second with 27% board seats held by women, followed by Nigeria, Morocco, and then I would say in a distant fifth place, there's Egypt. Okay, so this next slide is just the deep dive report. So the previous one was the regional report. So for the regional report, we only include five stock exchanges, normally the five largest by market cap. But then here you see a bigger grouping of African exchanges and markets. But again, across, I believe it was 10, uh, yeah, 10 markets and exchanges. We also see JSE leading as the first ranked out of all 10 African markets examined. Um, and again, they're followed by Botswana, then Ghana, then Nairobi. But again, I probably sound like a broken record. I do give JSE their credit because JSE is really bolstering even this group's average, given JSE's statistics here. Now, with that, I want to move into something we've started to discuss a little bit. But if you could put in the chat, what do you think might prevent a company in your region or beyond from advancing on these particular metrics? And it can also not necessarily be your region, it could be your organization or your country. So type in the chat, what do you think might be some of the barriers preventing progress to see even more women in leadership positions? Okay, I'm seeing culture pop up a few times already. See someone noting, oh, sorry, I lost it. Answers are coming in quick. More culture, legacy, nature of work, family responsibilities, hours of work, patriarchy, dominance by white males, gender bias. I've seen a few times winners and losers. More on culture, culture of a boys' club. Yeah, we hear that a lot across many, many markets when we do this training. Okay, these are a lot of good answers, but apologies for the sake of time, we have to move along. But I think a lot of key barriers have already been brought up by yourselves in the chat. So we know, in addition to the structural obstacles faced by women in the general workforce, such as unequal regulatory environments, lack of workplace flexibility, and conflicts between work and family obligations. I saw that noted a few times, family obligations. Well, there's also specific barriers that narrow women's leadership paths and cause the drop in representation at the top. This is really where we dive into the complexities of this topic. So I really recommend reviewing these on your own time as well. In the meantime, we'll go through a few that were not mentioned. So one I didn't see mentioned was something that's come up already in our conversation today, and that's limited availability of sex disaggregated data and inconsistent reporting practices, which can make it difficult to measure progress or understand the extent of the gender gap. In turn, that can create challenges in identifying effective interventions to close the gap. Actually, Laura Ford just noted education. I think you read my mind because there is a lack of training, education, and professional development opportunities, particularly in areas with frontline operational or financial responsibilities, which can hinder women's attainment of qualifications and their advancement through an organization. We can also see lack of gender-sensitive human capital management in hiring, retention, and promotion practices, such as non-diverse hiring committees and limited use of gender-blind applications, which can lead to decisions based on biases rather than on qualifications. So failure to recruit widely for applicants or not embedding a gender lens into job postings also can reduce the number of qualified woman applicants and then successful woman applicants for the job. We noted this a lot, so I won't get too into this one, but biases and stereotypes, which suggest that women don't have the characteristics needed to lead. Uh, I'm not sure if this was mentioned, but there is still some lack of awareness or skepticism about the business case for gender balanced leadership, which can mean that initiatives to advance women may not be a top strategic priority for companies. This is where I would note for all the fellow men on the call, as allies, men in leadership and men in organizations who have embraced the values of diversity and inclusion, we can and should help to elevate the importance of such initiatives and help drive action. I saw this one mentioned limited access to networks and connections. There can also be a lack of access to role models, mentors, coaches, and sponsors. One I didn't see mentioned, but in a different lifetime, I saw this in the real world on a northern facility in Canada in a previous career where there's unsuitable work environments in traditionally male-dominated industries. So that can make it more difficult for women to pursue long-term career paths. For example, if there's not women's locker rooms or women's specific um, washrooms, that can be a real challenge and deterrent for women. Uh, with that, there's also safety concerns in operational locations and gender-based violence and harassment, which can represent a serious deterrent to women's professional advancement, as well as, of course, their well-being, health, and safety, not to mention their productivity. So it's important to note that achieving a truly gender diverse senior leadership team and optimizing the true value in diversity is about more than sheer numbers and gaining parity in representation. The key is ensuring that men and women have equal voice and agency once they are in their leadership roles so that they all can contribute to determining their organization's path. Pardon me. So, to increase the number of women leaders and prepare them to take on leadership roles, companies must truly invest in women. This means attending to the culture and purpose of their organizations, and it means adopting a more people-focused business model as part of an approach which integrates an ESG orientation into all aspects of operations. Now, the next slide is about reasons for lack of progress on gender responsive climate action. I won't get into this for sake of time today, but if you do want to dive deeper into that topic, I recommend reading a report from the IFC on gender responsive climate governance. The report looks at why we aren't seeing the level of progress on gender equality we'd like to see in the context of climate action. And in other words, what barriers are getting in the way, which speaks to a lot of the barriers we just discussed. Now, with that, we're going to take a quick pause, a 5 minute break. So please feel free to grab a cup of coffee, a tea, perhaps take a quick stretch or walk around the office, and feel free to ask any questions you may have using the Q&A box too. And we'll see you again in just 5 minutes. Okay. Welcome back. We'll get started again to make sure we are able to cover everything and wrap up on time today. Now that we've had or made the initial concepts clear, we want to dive into more of the content and start with how we can enhance an organization's performance on gender equality. The objective of our next unit, Align, is to ensure that your practices align with the global best practices and standards, as well as any local or peer practices that should guide your efforts. Let's begin by looking at the global principles that companies can use to enhance their practices on this topic. Uh, the global standards we're going to discuss today, oh, thanks, Fiona, is the UN Women's Empowerment Principles, or the WEPs. So before we go into the principles, we wanted to get a sense of your current familiarity with the WEPs. So let us know. I see a lot of folks already answering. But is your organization already a signatory of the WEPs? So yes, no, or maybe you're not sure or you don't know. If you're one of the participants who is saying that your organization is not yet a signatory, we'll also give some information about how to become one at the end of this section. And if you're one of the participants saying you don't know, well, then I would absolutely encourage you after this session to check with a colleague or a team member or your leadership to see if you are a signatory or not. And again, if you're not, we encourage you to start the process to become a signatory. We'll end the poll there. You can see about 17% are yes, so that's great to see. Oh, sorry, sure. Okay. Sorry, some issues with the sharing, but we see 17% are yes, which is great to see. A lot of no's with about 38%, but a lot of I don't know with 44%. So again, if you're not sure, I encourage you after today to find out. Now, before we go to Alexandra, who's joining us from UN Women today, and we're very lucky to have with us today this expert on the UN WEPs, we have a video to help provide an overview of the WEPs and to answer any of the questions you might have about the WEPs. So before we turn it over to Alexandra, we'll play a quick video that introduces the WEPs.
Think about the impact of a signature. Think about the magnitude of a global movement. Think about the difference you can make and the power of transformative change. By signing the Women's Empowerment Principles, you can galvanize your shareholders and stakeholders to drive change in the workplace, marketplace, and community through a framework of 7 principles. Brought to you by UN Women and UN Global Compact, the Women's Empowerment Principles are a roadmap for business sustainability, innovation, and productivity. Businesses by the thousands and in every sector are becoming part of this world-changing movement to advance gender equality. Businesses that become models for attracting talent, entering new markets, serving their communities, and measurably improving the bottom line. Because gender equality means better business. Don't miss this moment to make a lasting impact on your employees, suppliers, customers, and investors. Join leading companies already on the journey to greater sustainability and growth. Commit to the Women's Empowerment Principles and make today your organization's signature moment.
Okay, great. And as mentioned, we're very lucky to have with us Alexandra today, an expert on the UN WEPs. So I'll turn it over to you now, Alexandra.
Thank you so much, Landon. And thank you for the opportunity to speak to everybody about the Women's Empowerment Principles. So I'm happy to see we have some WEP signatories in the room already. We are a global community of over 12,000 companies and CEOs that have signed on to the Women's Empowerment Principles from 193 countries. So it is my pleasure to present the community to you, but also what we offer and how we support companies to take action for gender equality. My name is Alex Carter. I am the coordinator of the Global WEPS Secretariat at UN Women, and I'm very much delighted to be part of this training today. So as we've already heard today, there's a rising importance of ESG, but also an interest from consumers and from investors, as well as the economic potential of integrating gender equality in the business model. Yet what we do see is that there are a lot of companies that are unclear on how to go about it. So they might be interested and committed to gender equality, but not quite clear how to go about it. So the Women's Empowerment Principles provide a holistic framework for companies, and it focuses on 5 pillars of action: on leadership and governance, on workplace, on the marketplace, on the community, and finally on tracking and reporting. So companies can use the WEPs as a blueprint to position gender equality in their core of their business strategy, as well as through their operations and beyond. So that makes the WEPs quite unique because it is the only framework globally that provides this holistic and comprehensive guidance across the entire business model. A lot of companies join the WEPs to make a public commitment to gender equality and women's empowerment on a globally recognized platform, but also to embark on the WEPs journey, to access tools and resources, and to again engage with other companies, as well as UN Women and UN partners, such as the SSE. I will go over the 7 principles of the WEPs very briefly. You can see them here on the right-hand side of the slide. I do want to note first that the principles are not organized in any sequence of importance. They're simply grouped based on similarities. And I think you will recognize that a lot of them address some of the issues that were highlighted by Landon and Flavia in the presentation. So the first principle is on governance, strategy, and gender responsive leadership. And we start with this because leadership builds the foundation for the WEP's work, and we require the CEO's commitment and buy-in from the executive team to make gender equality a whole of organization priority. So that is why the CEO signs on, and it's not necessarily siloed in HR or diversity departments. When we're talking about the high-level leadership, we are also talking about more women in senior leadership and on boards, but not only about that. It's really about the executive team, no matter their gender, and the board committing to and leading the implementation of the WEPs by making gender equality and women's empowerment a top strategic priority. The second, third, and fourth principle focus on the workplace pillar. So those include principles, policies, and actions on respecting human rights, adopting or amending policies to remove discriminatory practices, biased or stereotypical practices. Some of the actions can be to advance equal pay for work of equal value, prevention of sexual harassment policies, but also pathways and response mechanisms, and providing, for example, equal training and advancement opportunities to men and women throughout their career and life cycle. The fifth principle focuses on the marketplace pillar, and this is one where we see a lot of companies struggling with, but it's also one that in the recent years has gotten a lot of momentum, and a lot of companies are showing great examples of how to integrate gender equality in the marketplace. So this looks a bit from internal changes. We're looking at external changes and how companies work with their partners, their supply chains, and their customers and clients. So companies can influence the marketplace by either investing in women-owned businesses, procuring from gender-responsive companies that have strong practices, creating gender-responsive marketing campaigns that change and challenge gender stereotypes, but also rethinking on how products are being developed and making sure that they are equally safe and useful for women and men. Principle 6 looks at the community. So companies are, of course, part of the community and the environment that they operate in. So in Principle 6, we look at how initiatives and advocacy of the companies are making a difference in women's and girls' lives. To what extent is that already how are companies being intentional in terms of integrating gender equality in this? And we also invite companies to actively consult and engage with women and girls in local communities before rolling out initiatives, or also partnering with women-led or gender equality organizations in their communities that are maybe specialists in certain areas and can help and work alongside companies in implementing initiatives. And especially this month, International Women's Day month, is really a celebration of all of these organizations that are advancing gender equality and women's empowerment. So it's a great opportunity also to partner with those community organizations. And lastly, Principle 7 is an underpinning principle to measure results. And it's based on the adage that what gets measured gets done, and also what's visible affects change. So companies are encouraged to regularly collect data to understand their progress over time, but also report on their progress as well as the challenges that you experience to encourage other people, other companies to take on the same journey. You might have heard me say before, I was talking about starting a WEP's journey. So becoming a signatory doesn't end just by signing the WEP's commitment, but it is really a journey that companies go on for multiple years. Companies need to work on engaging internal and external stakeholders and make ongoing and meaningful progress. And we do fully recognize that that takes time. And also not all of the 7 principles can be tackled at the same time. So when going on this WEP's journey, we encourage companies to find a balance between tackling initiatives that are low-hanging fruit, so to speak, or changes that are easy to make, but also tackling deeply rooted systemic inequalities and things that have a systemic shift in company policies as well as the culture in the company. And these are often the more challenging and complicated shifts to achieve. So as you can see from the slide, we're looking at different steps after the consideration and signing. Of course, the first step is to engage with your leadership to see whether they would want to sign. And for all those in the room who already are WEP signatories, I do invite you also to reflect where you are on the WEP's journey and either start by activating or reactivating the journey. So this first step is where your commitment becomes action. And this starts by by taking, for example, the gender gap analysis tool, which is an analysis tool that helps you to see where your company stands. It helps you recognize where your strong points are, but also maybe where some blind spots might exist, or where there is a more urgent need for action. And then based on that analysis, we encourage and have tools that help companies develop action planning with clear goals and key performance indicators, with people who are responsible, and ideally with resources as well. And this is really the step is oftentimes a very encouraging step for people. It begins with honest reflection. It is often consultative, so with the larger consultation amongst your team, and it is a way also to get everybody on board and knowing that this is a key priority for your business. Engaging is about broadening your impact. So as part of the WEP's community, you have the opportunity to involve your employees, your business partners, your clients, and your customers in building a gender-inclusive ecosystem and value chain. And by fostering this dialogue and collaboration, you can extend the reach of your commitment beyond your own company and drive change that is collective and that reaches society and changes societies. Sustaining is an important part because we do see a lot of companies join with a lot of enthusiasm and then business takes over and businesses, of course, have a lot of different priorities. So sustaining progress really means ensuring that you have an accountability system or a tracking system, that you are on a regular basis revisiting your gender action plan and the goals that you have set yourself, as well as collecting gender disaggregated statistics and data that help you see progress. It also includes communicating your progress, sharing experiences, and reflecting on lessons learned from the activate and engage stages. And finally, reporting. So transparency and accountability are key to sustaining progress on gender equality and women's empowerment. And by reporting on results and sharing both challenges and successes, your company demonstrates impact, but also strengthens trust amongst stakeholders. So oftentimes we see that the key results that are achieved or the impact for companies, it's not to be perfect from the get-go, but really to communicate that you are making an effort and communicate the journey as well. And that will build a lot of trust with your employees, future employees, with your customers and clients, as well as your suppliers and partners. So this might sound like a difficult process, but at UN Women, we offer over 300 different tools and resources that can guide companies on how to work on the webs. And we also do regular webinars and trainings where companies can exchange and learn from each other what has worked in their context. So if you would like to become a WEPS signatory, you can go to weps.org/join and fill out the application. This is an initiative that is targeted exclusively at the private sector, so for registered businesses, as well as business associations, chambers of commerce, etc. So it's really looking at the private sector and trying to engage the private sector. And yes, we'd love to either hear from you or see your applications coming in. If you would like to have more information about the WEPs, you can also go to the website www.weps.org to browse a bit more and learn more about us. So for this moment, this was all from my side, but I will come back with a few examples at the end of the webinar. I'll hand over to Fiona. Thank you so much for the time.
Great. Thank you so much again, Alexandra. Always great to have you and a member of the UN WEPs join these sessions and give a great introduction. And again, we recommend that all of those looking for a first step on this topic, that you start by working with your leadership to become signatories of the WEPs. And for those that are already WEP signatories, of which there's more and more every day, we wanted to also flag what you can consider doing next. And this slide here is about EDGE standard certification, which is a certifying service that can help take your practices that additional step further and also provides a communication tool. But we'll leave it there because we'll have a member of the EDGE team joining us as a guest speaker at our part 2 session. So we'll dive into that then. So I'll turn it over to Fiona now for the next session.
Great. Thanks so much for that, Landon. So we've looked there at the global picture, and now we're going to get down a little bit more to the local level and the company level. So we know that one of the key factors that should be considered when you're thinking about doing this in a company, of course, is where you're located and therefore what regulations apply in that market. So we'll take a quick moment to discuss what we're seeing from a regulatory standpoint. And so a particular question that we often get asked here is whether or not quotas or mandatory requirements work, and if this is something that should be implemented in a country. And when Landon talked us through that market monitor data earlier in the session, we did see, of course, there are a number of markets that had regulatory requirements in place. So on this slide, you're seeing an overview of the markets globally where there's some kind of rule in place on women's representation, particularly on corporate boards. And this comes from a recent publication that we just put out, which we'll share in the chat with you. And so in the research, we found 3 broad categories of rules. So mandatory minimum rules, mandatory disclosure requirements, and also some voluntary targets as well. And so overall, you can see that there's a growing number of markets where some sort of requirement like this is in place. And our research really showed that there was quite a significant variation in how these rules were designed and applied across jurisdictions. So, for example, the legal basis that was used, how they were structured, what the scope of them was, and how they were enforced as well. And so, overall, whilst board diversity rules can be an important thing to increase women's representation, the experience we're seeing here is that markets demonstrate that minimum rules on their own don't necessarily guarantee success. So, for example, if there's weak enforcement, perhaps inconsistent application, or limited compliance, then of course the impact of these requirements can be reduced. So we've got a few extra slides available in the handout here, which explore some more data from UN Principles for Responsible Investment about this topic as well. But to help us understand a little bit better why sometimes mandatory requirements work and why they don't, we're going to dig into the issue of company implementation of these quotas, because, of course, how individual companies actually enact these requirements and the way they're interpreted within their organizations is likely to have a large influence on the outcome as well. So to help us explore this, we're going to do a little case study exercise. So we've got two hypothetical companies we'll be using in our case study, Owl Inc. and Peacock PLC. So these two companies, as we say here, both have a 10% women in executive leadership, both have 50% women and men in operational positions, and both have new CEOs who've really started to prioritize gender equality. And so we want to see now how those two organizations approach this topic. So perhaps we could say that these organizations are preparing for a potential mandatory requirement in their jurisdictions, and this is how they're thinking about going about it. So if we start with Peacock PLC, so their CEO decides to set a target for 40% of women in leadership positions in the next 2 years. And to help them reach this target, they make a large announcement to their staff, communicating this new target. And also because the CEO herself is a woman, she shares her experiences in climbing the corporate ladder and tries to set that example of how she's made it to the top. And then alongside that, they also decide to set a hiring freeze for men in the organization until that target has been achieved. So although, of course, some employees might be excited about this quite ambitious target, it may well be the case as well that others are feeling a little bit scared or uncertain about what this could mean. And then we move into our second company, Owl Inc. So Owl has also got a new CEO who's also a woman, and they have committed to reaching a similar kind of overall objective, but they go about it in quite a different way. So instead of setting that 40% target, instead the CEO decides that the organization should join the 30% club. And if you're not familiar with this, the 30% Club is a membership organization which is committed to getting to at least 30% women's representation on boards and in executive leadership. And this figure is seen as important because 30% is the critical mass at which minority voices start to become heard. So although they do want to potentially achieve this and surpass that 30%, they know that they're not really sure about the root causes of their current issues, and they're confused as to why, because they've got a lot of women in operational roles, they're not seeing those women advance into leadership positions. So to help them tackle this, they set up an internal task force to find out what the root causes of this issue might be and what could be preventing women from climbing up the top. And they also implement a final measure, which is a reverse mentoring program. So that's where the leaders are mentored by operational colleagues in the workforce, and that can really help the leadership to gain perspectives to understand what staff really think about these issues. Okay, so we'll go back to Menti now to have a little think together about which of these strategies we think would be most effective. So if we can just reshare the link again, please, and then I will share my screen so we can have a look at the results together. So what you'll see in Menti is a list of some of those different initiatives and actions that we just heard about that Owl Inc. and Peacock PLC have taken. And what we'd like to get a sense from you is how effective do you think these different actions would be, and which ones do you think overall would be most effective. So you can rank each of those actions on one being your most effective, six being the least effective, to let us know what you think about these measures. So I'll give you all maybe about 30 seconds. We're moving through this quickly in the interest of time, but just have a little think about what you think would be the most effective there. So again, no right or wrong answers here. Just feel free to share your perspective on what you think about this. Okay. Just as a reminder, you can access, if you scroll up a couple of messages, the link to Menti is just there in the chat if you're not already there. But we'll give you a moment or two just to have a think before we look at the right answers. Or I shouldn't say right answers, really, should I? Well, look at what we think could be the most valuable actions based on those examples we saw. So it looks like the task force is coming out the top so far. We're seeing a little bit of moving around between sort of 2 to 5 at the moment. So I'll give you another few seconds so we can bottom out maybe what the group thinks here. The target setting piece has moved up the rankings there. Originally, I think it was lower down. So some of you think having a target would be quite effective. Overall, it looks like the hiring freeze is probably coming out as the least effective, but maybe everyone thinking that options 2 through 5 potentially could be effective, but the task force definitely looks like the most highly ranked option across the group there. Okay, thanks everyone for voting. Good to get your perspectives. So we'll now jump back to the case study and we'll see what we think that this could have looked like for our two companies. Okay, so if we start with Peacock PLC, if we remember, they were the one that set that hiring freeze and set the target. So I think what we're going to say about this is that although probably setting a target might have driven some immediate action and progress, the real challenge with this approach is that they didn't go about identifying the underlying issues that were the root cause. And so overall, what Peacock PLC saw is that they didn't actually have that much success in promoting women because they hadn't identified some of the barriers culturally and process-wise in their organization that might limit women's opportunities. And also, it's very likely that their actions here would have demotivated men in the organization because they would have felt like they had less job security and less opportunities to grow. And what we saw as a result of that is that it took them longer to fill the positions. And sometimes perhaps they didn't necessarily select the right candidate because of that very binary approach. And so as a result, that could have been harmful in terms of the perception of the progress as well. And so overall, we could say that although they had good intentions here, because they didn't get to the root causes of the issue, they didn't see very effective progress, and they also had quite a negative impact on their organization's culture, leading to higher turnover and less innovation and contribution of their employees to the approach as well. But if we compare that to Owl Inc.'s approach, where, of course, if you remember, they would set up a task force and have the reverse mentoring scheme as well. So we might say that it's possible that Owl Inc. had to invest a little bit more money and time up front here, and that is important to acknowledge. But we do think that it's likely that investment would pay off with higher performance and better progress here. So that more holistic approach of understanding the root causes meant that the company was able to realize and understand better some of the particular barriers that they had in place. So, for example, they had some biased benefits. Some of their policies were not really designed to be inclusive to both genders. And they also had some kind of cultural attitudes in their leadership team that they were better able to understand and move forward from through the reverse mentoring scheme as well. So as a result of that approach, we could say that the company was likely to see increased innovation because the leads who were driving this forward were getting more ideas and solutions shared through those employee routes of the task force and the reverse mentoring program. And overall, that meant they probably had a better retention internally. They were able to reduce the amount of resources they had to spend on external hires and really focus on continuing to train and educate their staff members to focus on enhancing their culture and making progress. So I think hopefully that shows how those different initiatives could play out and ultimately why we think really those issues that get to the root cause of things can be the most effective. Although it can be helpful potentially to have targets and kind of set those goals, it's important that they're backed up with the right internal steps to help make them work in practice. Okay, so that brings us to the end of our little case study, which hopefully helped to understand that concept of corporate culture a little bit better. I won't go through this slide in detail, but we've highlighted it just to list some of those things that organizations could start to think about in terms of their recruitment practices and policies, etc., to help them make sure that they're really going to the root causes and not making some of those mistakes that Peacock PLC did. Okay, I think I will skip this poll just in the interest of time because we've got a nice segment coming up with Alexandra and our guest speaker, so I want to make sure we're giving good time for that. And I'll hand us over to Alexandra now. So we've looked there at that global and that local level, but let's focus in particularly on some peer practices from some companies, which Alexandra will talk us through.
Thank you so much, Fiona. And this is really one of the key parts of the WEPS community is being able to interact with and engage and learn from other companies as well. So I'm just going to take us through very high level descriptions of examples of what WEP signatories have done and how they've tackled issues, starting with the workplace, where we have an example of a leading bank in Sweden, which tackled the pay gap across its 16,000 employees in Estonia, Latvia, Lithuania, and Sweden. So to ensure fairness, the bank introduced a job evaluation system that is regularly updated and compared roles and responsibilities across the organization. And that gave them much more data and insight to measure and monitor pay equity effectively. And of course, developing systems is something that takes quite a bit of time, and a lot of thought went into developing the system and into making sure that they can compare equal pay for equal work. The bank's initiative is backed by close monitoring and regular reporting, both to amongst HR colleagues, but then also towards employees and of course towards management and the board. And this has strengthened transparency and accountability throughout the organization. The next example is one of our favorite ones because it gives a great lesson learned to always consult with your stakeholders because it can help companies avoid costly errors. So there was a textile manufacturer in Pakistan who wanted to tackle and provide support for care responsibilities, which, as we saw before in the research, disproportionately affects mothers and can be a factor for keeping them out of the workforce. So they invested a large amount of money to provide an on-site childcare facility for their workers to use, especially as the majority of the factory workers were women with young children requiring childcare. So they recognized the need, but then they found out that no one was actually using the facility. And so then they started to consult with their employees. So one would say maybe a bit later, but it's an important lesson learned. And they found out that the standard norm in the community was for the children to stay home with the grandparents, who were the main caretakers. So the company then changed its approach and instead offered childcare subsidies, which was both welcomed by the employees and also helped mothers remain in the workforce. Moving on to an example in the marketplace, I'm going to jump to the second one, which looks at gender responsive procurement. So a group of companies from the global watch and jewelry sector, including brands and suppliers across over 18 countries, approached UN Women and said they wanted to do a gender responsive procurement pilot. And they wanted to change their procurement, revisit, revise, analyze their procurement practices and see how they can integrate gender equality into it. And this was the first industry-wide effort to embed gender equality in supply chains. So the pilot mapped key gaps in procurement. And the interesting part of this case was really that they moved from a company level pledge to collective action. So it's really that call to, yes, you can go it by your own or by yourself, but you don't have to. The goal is also to change sectors and to change societies. So this collective action through the initiative set a precedent for how the entire industry can transform global supply chains to advance gender equality and women's empowerment. Currently, the companies are in the second phase of the pilot, where they are co-creating a gender-responsive procurement tool that is specifically for their sector, including supplier questionnaires, codes of conduct, etc. So that's an example of how a sector-specific approach in partnership with UN Women is hopefully changing an entire supply chain, basically. And there are many, many more examples also on the WEP's website, where we do have case studies and leadership notes as well highlighted. So you can also go and look for your sector and see if there's a company that might inspire your sector or also help you communicate specifically to your company about the options and the opportunities that exist. I'm just going to take one more minute to talk about the resources that exist. I'd mentioned it at the beginning. There are over 300 tools and case studies that can help you on your WEPS journey, available on weps.org. And we just want to highlight 3 of those. And as you can see, some of them are available to the public because we make a huge effort to develop a public good and knowledge around gender equality in the private sector. And some of them are for signatories only, so a bit of an incentive as well for you to sign on to the WEPs. The Gender Action Plan module is available to all, and it helps companies think through, once you've done the gender gap analysis tool and done a deeper insight into where your company has opportunities to advance gender equality, the module helps you and your team develop, prioritize actions that should be taken, as well as allocate indicators, resources, etc. The gender responsive recruitment checklist is an example of a tool that is, some would say, more easily implemented. It is sometimes it is oftentimes one of the first steps that companies do, is that they revise their recruitment and their language that is being used in recruitment, and those changes are often quite quick and impactful wins. So the gender response recruitment checklist can be used by your HR department, as well as for outsourced recruiting firms or headhunters to guide your company towards more inclusive recruitment. And then the gender responsive procurement assessment tool is an example of a tool that looks at deep-rooted causes and helps companies to advance gender equality in their marketplace. And it looks both at procurement policies, but also practices. And again, helps companies identify where they stand in that. Also, by taking the tool, it helps build an understanding of what is gender responsive procurement actually, and what are the potential actions that companies can take. So all of these are available at weps.org. And as I said, we invite you to sign up to the WEPs and to also explore and browse these resources. Thank you so much for your time and for your ear. Fiona, back to you.
Lovely. Thank you so much, Alexandra, for highlighting those great examples and resources. Super helpful. Okay, we're into the final part of our time, but I don't want to miss out on the great bit that we're going to finish with, which is a guest speaker presentation from Eureka. So we've talked already about a number of the benefits that companies can gain from taking action on gender equality and some of the various drivers they might have for providing transparency on this topic. And one such driver that we'll dig into a little bit more next time as well is that increasing interest in this topic from the finance and the investment community. With companies increasingly having gender equality factored into the assessment of their overall ESG performance. So to talk to us a little bit more about that, I'm very pleased to introduce Eureka Murathawa from the Bloomberg team. So thanks for joining us, Eureka. I'll stop sharing the screen so you can share your slides, and over to you.
Great, thank you. 1 second. Okay, hopefully you can see my screen. Hello, everyone. Thank you for having me today. My name is Eureka from the Bloomberg Sustainable Finance Data Team. Today, I'll go a little bit on the topic of gender equality and ESG scores. So just a little bit of background, financial market participants struggle to efficiently identify and assess ESG risk and opportunities due to an overwhelming amount of ESG content, lack of standardized definition and frameworks, and challenges evaluating financial materiality and impact form those frameworks. So Bloomberg's ESG scores are built on a materiality-based framework to help solve this struggle. Furthermore, research shows that gender-related topics are financially material, which is why it is a key part of our ESG score. So we'll go through financial materiality and ESG scores, followed by focusing more on the gender equality space, and lastly share on the corporate web portal tool that we have. Backtesting by our research partners in Bloomberg Intelligence shows that women on board can reduce volatility and support returns, though results vary by region. Diversity funds also have a low volatility benefit that offers downside protection. Analyzing results from January 2013 to 2026, it was found in Europe companies in the first quintile delivered the highest return. Quintile 1 or Q1 represents stocks with the highest share of women on boards, while Q2 are the lowest on a sector-neutral basis. Screening for metrics such as more women on boards means less volatility across many regions analyzed, suggesting that the strategy may reduce risk and offer downside protection. Though there isn't a relationship between gender and returns in the US, volatility was consistently lower as the share of women directors increases. A similar low volatility benefit was observed for diversity funds, which many outperforming during market downturns. Returns higher for companies with more women on boards, compared with many outperforming during market downturns. This is just one example of financial materiality. To dive deeper into this topic, see the first link in the table on the bottom right. And to learn more about financial materiality in our ESG scores, read the research in the other rows on the table. From our ESG score function on the Bloomberg terminal, we can view the company's Bloomberg ESG score we have calculated based on the data scraped from companies' public filings. ESG scores on a scale of 0 to 10 are validated and refreshed typically every month. However, it is important to note that the underlying data fields that are used to calculate the ESG scores are updated live, for example, in between the monthly refreshes. Our scoring methodology considers over 30 risk factors and dozens of sub-issues organized into a clear hierarchy, leveraging hundreds of curated sustainability data points that have been deemed financial material by industry associations and standards providers such as SASB, as well as Bloomberg Research. To give you a better idea of what all of this means, let's go over a simple case study together. Here we will analyze two companies. Firstly, think about the company's high-level social factors at play and any biases you may have. For example, which company may be more advanced on their gender equality journey, which may have more policies or initiatives to promote equality in the workplace. Now let's dive deeper into the Bloomberg data, looking beyond the perceptions to see how data can support your decision-making. One question we often receive is, where does gender fit into ESG? Is it S for social or G for governance? What you are seeing here is Bloomberg's S and G scores and how it appears on the Bloomberg terminal. Here we have company A and B's scores separated into the green and yellow boxes. Bloomberg calculates the overall ESG pillar scores, the weighting, percent of how much of the data is disclosed, and lastly, an indicator comparing against their industry peers. Just looking at this, we can identify that company A in green is leading in the social score, whereas company B in yellow is leading in the governance score. As shown here, each S and G pillar looks at a variety of data fields, not all directly relevant to gender, but some of the fields most relevant to gender include social supply chain management and board diversity. It's evident that gender doesn't necessarily fit perfectly into a specific ESG pillar. We see the G part is universal in critical fields like percentage of women on board, but in S, financial materiality was found to be more industry specific by researchers. Let's take a deeper look into some of the data points that make up the former screen. The data fields you see here are part of the S and G scores that we previously reviewed. These data points were captured from publicly disclosed company reports like the CSR reports, ESG reports, annual reports, and etc. Starting at the top, the table shows the talent pipeline through different levels of the business. There are also some fields related to the support and policy available in the workplace that may not enable gender diverse talent to succeed. In the table, we see that Company A has more women in the pipeline, however, less disclosure on available benefits. On the other hand, Company B is a little less advanced in their pipeline, but provides more disclosure in their gender-related data. In short, although we can't tell which company is doing better, it's evident that just because Company A has more women on board, it doesn't always mean it's the best place for women to work, if, for example, there are a lack of policies or benefits in place. So the overall purpose of this brief exercise is to hopefully change some of your initial perceptions and also to give you insight on what data investors are looking at to make decisions. Even if a company is performing well in one area, such as their social or governance factors, it doesn't necessarily mean that they're completely well advanced in gender inclusivity specifically. Hopefully you have a better view of the kind of data you may wish to encourage your listed companies to disclose. So now we'd kind of like to switch gears and introduce a few offerings Bloomberg provides to companies, especially to ones that do not have access to our Bloomberg terminal. To ensure corporates can learn, view, and inquire about the Bloomberg ESG scores and associated data points we capture, Bloomberg has launched the ESG corporate web portal. And upon logging in, corporates can gain a better understanding of their Bloomberg ESG scores, review what ESG data has been collected from the company's public filings, inquire about any data point by submitting the correct value with the public report, which will be reviewed by the Bloomberg data team. Currently, this portal only supports our Bloomberg ESG scores, and any company under a Bloomberg scoring universe can make one institutional account for free at the link on the right. Feel free to create an account and explore this tool. On this slide, you'll see an example of what your screen will look like after you log in. A few key points to highlight are you can download and get access to scoring methodology documents, and which you can use to further understand the scores. And in the table section, you'll be able to view the hierarchy of the scores from the input data all the way up to the overall score. When reviewing the data, you can challenge the data points if you do not agree or think the values are missing, which can be done by clicking the pencil icon. So I went over it, and it's a brief explanation, but I like to conclude with this powerful quote: "You can't manage what you don't measure," which emphasizes the importance of data transparency, not just to analyze performance, but to better understand the data and unlock opportunities for improvements by being face-to-face with the data. Thank you very much, and please feel free to get in touch with our team at esgcorporate@bloomberg.net to learn more about the data collected by Bloomberg and the scores. Thank you so much.
Brilliant. Thank you so much for that, Eureka, and for working so well to time with us there as well. I really appreciate it, but great to get your perspective. And I think that's a really helpful example to bring to life for us, how this information is really being used in practice. So thanks again. Brilliant. So we're coming towards the end of today's session. So just to say a big thank you to you all for taking part in our first part today. I've just shared the link to Menti again in the chat, but just if you can let us know in response to that Menti question, how you're feeling about those 3 areas of knowledge that we were aiming to advance today. That's super helpful for us to know. From the responses I see so far, I think we're feeling more comfortable, so that's great. So as we wrap up, just a few quick reminders from myself. Firstly, just to let you know, you'll be able to get your completion certificate for the training if you join us for the second part of our course next week. So be sure to join us then. And all that remains from my side is just to share the contact details for all of the organisations involved in this training, which you can find in the slide handout, which, as a reminder, you can download from our webpage, and Eureka's slide presentation with the details of how to reach out to Bloomberg are available there as well. As we finish up, just a big thank you again to Eureka for joining us. Thank you to the SSE official supporters who helped make this program possible, including JSE. And of course, a big final thank you to you as participants for joining us today, to Alexandra at UN Women, to our hosts at the Johannesburg Stock Exchange, and all partners on this program for helping make today possible. So hopefully this has been a helpful start to our training, and we'll look forward to seeing you for the second part of our training next week, where we'll get into that side around implementation and communication. So wishing you a good rest of the day, and we'll look forward to seeing you at part 2 next week. Thanks, everyone.